Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Brent crude oil, spot gold, and Bitcoin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or on any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
ICE Brent crude oil futures. An indecisive spinning top on Friday, but one that could also be seen as a bullish harami. This after the previous session's bearish engulfing pattern and bearish long black Mariposa. The market is still back below the somewhat stratified and layered overhead congestion, stretching up from 68.69 up to 72.29, whilst immediate support comes from the July low at 67.43, and especially from the bright red neckline extension, currently at 66.59, of the March to May 2020 reverse head and shoulders bottom, plus the slowly rising gold long moving average, currently 66.07. However, the most interesting recent pattern has been the breached and repaired December-based bright green bullish Andrews pitch hook. The market right now just above the bright green lower time below, which is currently at 67 even. This continuing failure to really push up through the overhead congestion, despite the lower low on Friday, may be telling, especially for target X overhead at 73.25, and that's the target for the doubling up of the break above the dark blue May and July 2025 to January 26 bear channel, and that's currently 55.75 to 63.93. And so far today, a higher opening, then a dip down to the July 21 low, but not really pressing the market lower at this time. Spot gold, a fourth countering bullish piercing line pattern and bullish closing white Mariposa on Friday, after the previous session's third countering bearish engulfing pattern. We are seeing some large ranges, but all seem to be centered around that very recent late January to early February 50% Fibonacci line at 49.99. Below we have support from an old 50% projected Fibonacci line at 49.14, and the late December 25 to late January 26 true 50% Fibonacci line at 49.31. Whilst topside we have resistance from the 38.2% Fibonacci line of the same move, and that's at 50.88. As I said last week about this 38.2% Fibonacci line, and I quote, "This 38.2% Fibonacci line seems to be a significant local resistance, as it also capped prices last week," so that's 2 weeks ago. End of quote. The big overall patterns here had been the late January V-top, along with the subsequent bounce up from the 50% Fibonacci line, the late May 25 to late January 26 move at 44.20, which was aided by the October 25 highs in the 43.80 zone. Between these two patterns, I drew last week a dark blue late December 25 to early February 26 bullish Andrews pitch hook, which I think might be able to show the potential bullish angle of attack of this market. It is early on, and I may finesse this still to a shallow bullish shift pitch hook for the same move, but right now we're in between the overhead dark blue middle time above, which is currently at 53.64, and the dark blue lower time below, currently at 47.34. So far today, a big and slightly lower open and follow-on move lower, though not by much, as prices have returned back up and look like a possible hanging man pattern right now. Bitcoin, an immediate countering key reversal down and bearish engulfing pattern on Friday, if only just on the latter, after the previous session's bullish opening white Mariposa. The market continues to seemingly be taking stock on what has been achieved and what is still lying open. In the immediate past, we reached both the primary and secondary targets for the January lopsided head and shoulders pattern. This was part of the break lower from the failed bullish cup with handle pattern from December last year to January this year, which ended up as a very large bearish October 25 to date halfway hesitation. All these moves lower tied in with the big, possibly as far back as October last year, big bearish halfway hesitation. We have already reached a number of targets below for this pattern. So for a primary target down in the 72-100 zone, as well as a harder to reach secondary target down in the 64,000 zone. This leaves us with the much harder to reach tertiary target X2 down in the 54,000 zone. The dip 2 weeks ago below the 50% absolute Fibonacci line at 63,129 helped these targets below, as did the same dip and the one last week below the bright red neckline extension to the August 21 to January 22 head and shoulders top, which is currently at 67,375. But prices have not as yet stabilized down there. Instead, somewhat stretching up to the 50% Fibonacci line of November 22 to January 25 head and shoulders top, which is at 70. Let me rephrase that, 70,929. We now have to consider the potential showrunner for this move lower, which is the bright green October 25 to mid-January 26 bearish Andrews pitch hook. The market today in between the overhead bright green upper time, currently at 81,343, and the bright green middle time below, currently at 58,913. Now I'm of course prepared to finesse this bearish Andrews pitch hook into a shallower bearish shift pitch hook for the same move should it be required. So far today, well, not much, capped by the November 2021 high at 68,977.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.